Here are 7 dividend stocks with double-digit growth rates to boot. Let's get started. Welcome back, guys. Today we have 7 dividend stocks with double-digit growth rates. I'm excited to cover these kind of because we've discussed some of these on the channel previously in their own individual videos. So guys, sometimes dividend stocks get a little bit of a bad reputation because some people say that they're maybe only for investors who aren't concerned about growth. But we know that's not always the case. I mean, in reality, there are many stocks that pay dividends, but they also generate double-digit stock price gains on a regular basis. So that's what we're here to talk about today. So just so everyone knows quickly, you can utilize MarketBeat's dividend screener to find opportunities like the ones that we're going to talk about today. Comment down below and I'll get you a link to that if you want to try it out. But let's get into it here. First on the list is Lockheed Martin, a security and aerospace company. It's trading at 16 times forward earnings and is expected to grow earnings by 8.82%. So what are the benefits and risks of this one?
So Lockheed Martin, we're talking about a leading defense contractor for the United States. And obviously with the geopolitical environment that we're in, you would expect that Lockheed's going to benefit significantly from any U.S. spending on defense. The risk involved, as I've pointed out, is that there is talk that the defense budget may get trimmed in areas like the jets that Lockheed Martin provides. But overall, the stock's trading at a nice valuation, and there's really no reason for investors to be concerned about anything like the dividend. Double-digit growth is on the way. This is a safe stock, but it's also going to be a growth stock.
Yeah, I think this is a solid dividend. And, there's a lot of war in the world right now. That's a good driver for business. Cash flow is pretty robust. I see Lockheed Martin moving higher along with the dividend over the next couple of years.
Okay, then we have Air Products and Chemicals. It's a key player in the basic materials sector, specifically in the area of industrial gases. Why is this one on the list?
Yeah, industrial gases doesn't always get a lot of investors fired up here, but one of the areas that Air Product Chemicals specializes in is this conversion that we're having from fossil fuels into specifically hydrogen. That's what makes it an interesting play here. Again, attractive valuation, projected to have, again, double-digit earning or double-digit stock price growth this year, and a very stable dividend.
Yeah, I agree with Chris that this is a good play for the hydrogen movement. I think that with the dividend, it makes it a doubly good choice for investors.
Okay, moving along to American Tower. The case for this one comes down to the continued build out of high-speed internet throughout the country. As a specialty REIT focused on data centers, how does the American Tower's business model provide maybe a unique opportunity for dividend investors?
Yeah, it's probably interesting that we're talking about this on a day when they're having issues with 5G and high-speed internet throughout the country. But that's where American Tower plays into it. But their portfolio concentrates on the infrastructure that's needed for specifically data center facilities. And as we learned from NVIDIA, data centers are huge in what's going to be growing in the current build out of AI. American Tower just seems like a very logical choice, especially because investors are very aware of the benefits of owning real estate investment trusts, REITs, as dividend stocks.
Right. REITs are good choices for right now. Real assets, you have a little bit of protection from inflation. You got steady cash flow and dividends. This is fundamental to tech and to the AI movement. All these data centers around the world are being built. Somebody's got to pay for them. Ultimately, this company is going to be doing these sale leasebacks to the major data center providers and just being a well-established part of the digital tech infrastructure.
Okay, then there's Chevron, of course. We like to talk about this one. With Warren Buffett shifting some investments into Chevron, what does this say about the defensive nature of oil stocks? And maybe how does Chevron stand out among its peers?
Oil's making a comeback. I don't know where it was at this morning. I know it's been flirting with that $80 level, but most analysts still believe that by the end of this year, oil is probably going to be, again, over $100 a barrel. Chevron benefits in that environment. We've talked a lot on this channel recently about Oxy and Buffett's investment in that, but Buffett recently made a significant investment in Chevron after selling some of his profits on Apple. And since this is a video specifically about dividends, it's important to note Chevron's a dividend king. They've continually shown a willingness to grow that dividend and reward shareholders in other ways, such as share buybacks.
Right. That's part of why Mr. Buffett wants to get into this one, just like with Occidental, the balance sheet, the cash flow, the value to shareholders above and beyond the dividend, which is ample.
Okay, PepsiCo, another favorite here. Considering its recent performance and its dividend history, why should investors consider adding it to their portfolios despite its last 12 months downturn?
Well, PepsiCo is the market leader for consumer staples, and right now it's underperforming because of its exposure to snacks. The post-pandemic normalization of snacking has its snacking segments kind of struggling. The beverage segment is still good, still on track for some significant growth. It pays a solid dividend, and right now it's trading at a discounted valuation to its own history, which makes it a bargain.
Yeah, I added this when I was doing this article. I added Pepsi to my list, and I was actually thinking about Thomas because he had just written about Pepsi, and I was like, I can't really add anything to what Thomas just said because all of those are the reasons why I think consumers need to be in the stock.
All right, then there's Philip Morris, a sin stock that's been undertaking a multi-year pivot towards smokeless tobacco products. The company has increased its dividend for 16 consecutive years, so that is promising. What are the important details with this one?
Well, like you said, Lacey, this is considered in that category of sin stocks. And for some investors, Philip Morris is going to be a no-go, and I understand that. It simply is one of those stocks that when you're looking for defensive stocks that are going to perform well no matter what's happening in the economy, Philip Morris is going to do that, not just with their smokeless, their tobacco products, but with their increasing portfolio of smokeless products. And as you just pointed out, they have a rising dividend. This is a stock, it's a defensive in nature. And like I said, I understand it's a no-go for some investors, but if you're looking for, again, dividend stocks that are paying rising dividends and have a chance for double-digit stock price growth this year, Philip Morris should be on that list.
Yeah, I think Philip Morris is among the companies with the most, the safest cash flows. Sin stock, people are going to smoke. So it's got a safe dividend. It's good for your portfolio.
Okay, last one, UPS, kind of a bit of a contrarian choice, as you said, Chris, to close out this list. UPS is down 19% in the last 12 months, but analysts are looking ahead on this one with UPS taking measures to modernize and improve their efficiency. What growth prospects should investors be aware of for UPS?
Well, yeah, the story with UPS right now is deteriorating business now while they're setting up for the rebound. They're building efficiency and building leverage. So when the economy does turn, which the market thinks will happen in the back half, and growth resumes, it'll have leveraged earnings. This stock's also trading at a discount. It's trading near its lowest levels in a few quarters at least, if not for a year or two. It's definitely a good buy.
Yeah, and the time to do it is now because at some point this year, analysts still believe there's going to be at least one rate cut, and you're going to want to be in the stock because, as Thomas said, the company's taking the steps now to be a really good buy and a really strong buy when that pivot happens.
Right. I think all it will take is a single rate cut to signal to the market that the Fed has exited its high rate stance, give the economy a chance to reaccelerate, and that will definitely be seen in UPS earnings as businesses and consumers start to buy more and ship more products.
All right, well, great discussion here today on these 7 dividend stocks. More great discussion to come as we continue to provide you with the latest stock market news right here at MarketBeat. Thank you everyone for tuning in. Don't forget to comment down below and I'll get you that link to try out the dividend screener completely free. Thanks guys, we'll talk soon.